we'll be showcasing Enthusiast Gaming, a company that we're very excited about given the prolific growth in gaming recently. And more importantly, we'll be having Adrian Montgomery, President and CEO, Julia Becker, Head of IR and Marketing, and last but not least, the man behind the numbers, Macdonald, the CFO of the company. Delighted to welcome everybody today on an open Zoom call, and obviously grateful for everyone taking the time out of your busy schedules to be on the call with us today. Given the backdrop of COVID-19, we've actually not been this excited to showcase a company that is centered upon companies profiting from people staying at home. A new sector with truly explosive growth. To put it in perspective, let me read some recent gaming esports statistics before we turn the mic over to Adrian. Twitch, a streaming platform for gamers, has seen consecutive weeks of 100 million plus hours of viewership. YouTube recently lowered its video quality for gamers to help relieve both bandwidth issues. We read recently that 2.7 billion gamers worldwide are generating about 160 billion in revenues in 2020. Twitter also reported a 71% increase in esports and gaming conversation volume. There's 1.9 billion Gen Zers globally, of which 67% of them identify themselves as a core component with esports and gaming. It's not surprising that Apple has 80% of their App Store downloads that are gaming related, and gaming is a dominant entertainment source today. It's actually 2 times bigger than both the music and film industry combined. The average American spends over 700 minutes a day consuming media. So it appears that gaming has become a new social network for millennials and Gen Zers, which, Adrian, plays into your mission statement that you're building the world's largest platform of communities for gamers and esports fans. Amazing how the content is being consumed differently these days. And before I turn it over, I'd be remiss not to highlight and congratulate the Enthusiast Gaming on some of the Q1 earnings stats. You guys had total revenue in Q1 of 7.1 million. I should mention that as a record Q1 revenue. Gross margins of 46% compared to 34% in Q4 2019. Page views increased 35% to 2.3 billion compared to 1.7 billion in Q4 2019. And you guys finished this with a strong cash position of 11.5 million at quarter end. Further, you guys beat all analysts' expectations. You're currently being followed by 4 major institutions. Adrian, I think I'll turn it over to you, and perhaps you can comment on what you're seeing out there in such an amazing industry, how you guys are taking advantage of that, and I think most importantly for stakeholders and people that are on the call, how you're making money.
Yeah, look, thank you, Erik, and thanks for the opportunity to talk to you and your shareholders and our shareholders. It's great to spend time with you, and we would be remiss if we didn't thank you once again, you and Mark and Alex and John Veltier for being with us every step of the way. And look, when we started as Aquilini Game Co., we had a concept, an esports concept. Luminosity at the time, I think on an LTM basis, had done a couple $1 million of revenue. And after a lot of effort and your help and others, we were able to do in our slowest quarter, which you just highlighted, which is $7 million. And again, as a combined business, you know, when we talked about the Enthusiast and Luminosity merger with you and our shareholders, we talked about a business that had pro forma revenue of $22 million. And, you know, we have 2 quarters under our belt as a combined entity, so we're still pretty young. But in Q4, which is the busiest quarter for a company like ourselves, and Q1, which you mentioned, is the slowest, This, collectively in those 2 quarters, we've done over 17 million of revenue, over 40% gross margin, and we're proud that we're walking the walk in terms of talking about a business that can grow at 50% a year, and we're achieving that, and we're working hard to grow it even further. In terms of what you're talking about, certainly we're in unprecedented times. We've built a business around hardcore gamers. There are 2 billion Gen Zs, as you say, in the world. 70% of those Gen Z males say that gaming is a core part of their identity as human beings. Very powerful statistics. And what we found through COVID is that if you give a young person who loves video games an extra hour in the day, they're going to spend it somehow, some way on video games. And so we started as an esports company. We're so much more than that now. And I think it bears mentioning that we are and what we're building is a digital media content technology company that caters to avid video gamers, of which there are a couple billion in the world. And so what that does with that focus is, because of the strong relationship we have with our viewers, and again, we're spending quality time with close to 200 million of them each and every month, which makes us the largest gaming platform in North America and the United Kingdom, and basically the English-speaking world. But because of the depth of that relationship, and the frequency with which they visit our sites and consume our content, we have a very unique opportunity to generate more and more additional revenue streams. So yes, we started this off by saying we're going to sell advertising for more money, and we're going to properly have ad rates that reflect this lucrative demographic that we interact with. But because of that relationship, we can also sell them subscriptions. We can engage in e-commerce. We can license our content. And so we're one of the only businesses in the gaming space that has multiple revenue streams upon which to draw. And we're seeing a lot of growth in our subscription offering. We're having exciting conversations about licensing our content with some of the bigger American media companies. We're a business that 2 days ago presented to the senior leadership of the Democratic National Committee in Washington. And they had found out about us, and they know that their nominee, Joe Biden, needs to resonate in the digital universe. And we told them 3 things when they asked for this meeting. It was an honor to be invited. We told them 3 things. 1, we have 65 million Americans that spend time with us each and every month, double what Twitch has. 45% of every American male between 13 and 34 visits at least one of our sites each and every month, and they come back again and again. And the third thing we told the DNC, which is the thing that they were most impressed with, 50% of our audience never uses Facebook. So again, we're growing at 50% a year. Our commitment to building out a direct sales team to get higher advertising rates is starting to work. We did a big deal with G Fuel, the energy drink. We did a big deal with Procter & Gamble. We just announced a deal with the Titans and Pizza Hut yesterday. So we're delivering on that, and that is going to happen on the income statement line. But the thing that is the most amazing about what we're doing is we are positioning ourselves to know more about the hopes and dreams and preferences and habits of 200 million young people than anyone else. And the value of that data set will be as lucrative a data set as you could possibly have in the world. And so that's what we're executing on.
So Adrian, would that be, could you compare that to, say, a Facebook then?
Well, again, Facebook, that is what Facebook does. Facebook, people in the advertising world complain. They say, oh, Facebook and Google get 70 cents of every digital ad dollar. The reason why is because their ads perform better than any other digital ads in the world. The reason why their ads perform better is that people willingly share their lives with Facebook. We have the same opportunity in front of us. We have, again, 200 million young people that we speak to. We speak to them through a shared love of gaming. We do it in a very genuine way. We are now closing in, and I'm really proud to say this, and again, this has been assisted by COVID, of course, but this company of ours is closing in on a second straight month where over 1 billion page views of our content is being consumed on a monthly basis. That's unbelievable. And so, like Facebook, because of the depth and the genuineness of the relationship we have with our viewers and our fans, we have the same opportunity to know as much about them as anyone else. And so there are a lot of interesting similarities, which is why I'm saying that, we started as an esports company. We're not. We're a digital media content technology company. That is who we are, and that's why our value proposition is incredible.
Thanks, Adrian. You recently hosted a exclusive featuring Zoo, who I didn't even know who Zoo was, embarrassed to say, and Fresh Asian, which is part of your Luminosity side of the business. Wondering. It was recently, I think it was about a week ago, you guys had that on Twitch. Was it a success? Maybe that plays into being more of a digital media company than anything, but maybe you could explain to the people on the call what that was all about and whether it was successful and what that does for EGLX.
Yeah, so, the scarcity of what we have built is massive. When you talk to as many young people as we do on as regular a basis as we do, it is almost impossible to replicate that. And it's almost impossible to replicate the genuineness of that relationship. And, before Zoo, I'll give you an example. The most successful video game franchise of all time is Super Mario. The second most valuable video game franchise of all time is Pokemon. Pokemon's been around for 24 years. Over 300 million games have sold. Last year, Hollywood had a Pokemon movie, and it did $450 million at the box office. A huge, huge franchise. The most famous character in that famous game is Pikachu, Pikachu. I encourage anyone who's on this call to type Pikachu into your browser. And anywhere you are in the world, you'll type Pikachu, and the first thing that'll come up, unsurprisingly, is Pokemon.com. The second thing that should come up, ahead of the Wikipedia entry, is Bulbapedia, which is our site on our platform. We've never spent a cent on search engine optimization. And when you type one of the most famous video game characters in the history of the world up, our site comes up right after Pokemon.com. That is a very, very genuine, strong relationship that is not easy to replicate. And so the way we want to be focused on growing that relationship and making sure it's as dynamic and engaged as possible is we want to deliver more content to our viewers. And so the ability to deliver a gaming-centric concert between one of the world's biggest DJs and our gamer, Fresh Asian, who was just voted the Twitch Streamer of the Year, putting those two together is a means for us to engage with our audience, which again is our secret sauce. And so that's one part of it. But the other part of it, which is pretty cool, is DJ Zoo is one of the biggest EDM DJs in the world. And he is managed by one of the biggest managers in the world, Kanye West's longtime manager, Arcade Fire, etc. Zoo's record label, Universal, is the biggest record company in the world. And Zoo hasn't released new music in a couple years. And those three groups, the biggest record company in the world, one of the biggest managers in the world, one of the biggest DJs in the world, they collectively determined that the ideal place for him to reintroduce new music into this planet was off the Luminosity channel on Twitch. That's pretty cool. And the better news is that they all are looking pretty smart for making that decision, because over the course of that 3-hour stream with our gamers and Zoo and the concert and promoting it on our platform, we generated over 1 million unique viewers, over 3 million views over the course of that stream. Very, very few people can do that, and we were able to do it. And so that is going to lead to more opportunities with record labels and artists, et cetera, which is going to feed more content, which is going to strengthen the bond that we have with those 200 million people, which is going to ease and make easier the path to creating one of the most valuable data sets in the world.
And inevitably the bottom line or the money that you make from that would be then from sponsors, or does it come from various other sources like merch and those sorts of things too?
Sponsors, merch, e-commerce, subscription. We have off one website, the Sims Resource, we have 110,000 people. When we started, we had 60,000. When we bought the Sims, we have 110,000 people that pay us $4 a month every month and for that subscription. And we look at that universe that we have of 200 million people, and we say, look, how do we get 1 million people one day to pay us $4 a month for something? Creating unique experiences like the Zoo concert might be the cornerstone of a new subscription offering. So we can monetize in a variety of different ways, and none of our competitors can do that. And it all comes down to the strength of that relationship we have with these young people who love video games. So, one of the other things that's relevant to this conversation, Erik, is that I think I've tried to explain why digital communities are so valuable, because a lot of people love gaming, and for us, the publishers can make the games, and Twitch and YouTube and Facebook can broadcast the games and the streams. We want to own where the fans hang out to talk about the games. And those digital communities are valuable for that reason, but they're also valuable because third-party data is going to become irrelevant on the internet, right? Google is going to ban third-party cookies. Phone registration identification is going to become a thing of the past. If you do not have a direct relationship with your audience, you will not succeed. The New York Times, there was a big article around the world yesterday. The New York Times is phasing out third-party data. So if you own these communities, as we do, with this tangible, sticky relationship with our viewers, you're going to have an exceedingly valuable business. And the case in point on that, I'm sure a lot of our investors would know the Barstool Sports. Penn National bought 35% of Barstool Sports which has a monthly audience of 65 million people, for a valuation of $450 million. And again, same premise. Where can I find a bunch of rabid sports fans in one place that I can talk to and convince how to become casino goers? That's the value prop.
It's amazing, Adrian. I guess, and I got this question a few times from people that are probably on the call, and the question, and I'll just read it here, was maybe that you could comment on, given all the positive news that comes out of EGLX and the company's growth, the amazing financials, the milestones that you guys are hitting along the way, the uplist on the TSX, which very few companies will ever do. How is this all not reflected in the share price?
Look, I mean, it's a question a lot of people ask, including myself, quite honestly, who has a lot of skin in this game, and so does my management team. And won't lie to you that it does affect us, and it is frustrating. There's a lot of answers that people have given that I could give that, quite honestly, I'm uncomfortable giving because it makes us sound defensive or blaming other people. The one thing I would point out, which is that when we started with Aquilini Game Co., and there's a lot of people like you who've been with us since day one, we started as an esports company, and esports is this exciting high growth area, and it's getting bigger and bigger and all that kind of stuff, particularly through COVID. But the thing that a lot of people say when it comes to esports is they scratch their heads and say, look, I get it, but I just don't understand the business model. And there have been a number of esports companies, Super League, Allied, Astralis, that have gone public, and they're not doing so great because people, the business model perhaps has not yet caught up to the hype. And so what I'm saying is perhaps our classification, as exciting as esports is, our classification as an esports company might be hurting us because, as I said, we are so much more. And the one thing, as frustrating as the share price might be on a given day, the one thing that is inevitable is that somewhere, sometime, someone is going to wake up and say the scarcity value of interacting with 200 million people through a love of gaming is through the roof. The depth of your relationships are through the roof. And therefore, the ability for you guys, unlike anyone else, to create one of the world's most valuable data sets is undeniable. That moment will happen. And when that happens, all bets are off in terms of what the potential of this company is. And our job, on behalf of the shareholders, is to have those conversations as many times with the right people that we possibly can, because that will happen. It's inevitable. You can't recreate what we have. You can't, like that Pikachu example is one example, right? DJ Zoo releasing new music off our Twitch channel is another example. The Democratic National Committee asking for a meeting with us is another example. Like, these are very real examples of what I'm talking about.
Sounds I feel like I want to hang up and buy some more stock. Very exciting, Adrian. I don't know that I did have one other question around your KPIs. I don't know if Julia, you want to answer this, but it's regarding the 40 cents per user. KPIs is a key price indicator. Julia, I don't know if you want to take that one, or Adrian.
You know what, Alex? Why don't you take that one?
Yeah, sure. I'd be happy to. So our RPV metric, way we designed it and what's provided for was really to give industry comparison to what's the standardly used RPU. the reason it's RPV instead of RPU, revenue per viewer instead of revenue per user, is we wanted to properly capture all of our audience. So we wanted to include our entire denominator there, and that includes both our 160 million monthly unique website visitors, but also, of course, our 50 million plus strong esports audience. Now, how we got to 40? I mean, we looked at the key components of what's driving the RPV. That is advertising, that is subscription, and that is sponsorship, and items like that, which also happen to be the cornerstones of our business model and our investment thesis, which is what makes this KPI so relevant. Now, those drivers, Adrian's already gone through most of them. They are, of course, moving our inventory through the highly lucrative premium direct sales channel at a 10 to 20x revenue, moving inventory through the private marketplaces at a 5 to 10x premium on the revenue, expanding the subscription model, of course. And when we looked at all these, and we looked at industry norms, and we looked at how we can ignite these and what we need to put in place to fuel them on a short to medium term basis, that's where we landed. And we measured it, we did the financial impact, and 40 cents is our goal. And that is a short to medium term goal. Think 12 to 24 months, maybe 12 to 18. And that's how it was determined. And it's relevant because it's driven by the main drivers of our core business model, and it's also a reflection of our audience, and it's industry comparable.
Okay, so maybe Alex, while I got you there, so you guys finished the quarter with a super strong cash balance. Perhaps some of the viewers are thinking, okay, well, how far does that cash balance take us? And then maybe I'll go back to Adrian and ask, what are some of the other key growth drivers that are not listed here, perhaps M&A and that sort of thing, and whether that's built into the financial model or not.
Sure. Look, our financials, I mean, adjusted EBITDA is non-GAAP, but I think everyone look at the financials, they're probably going to say, okay, this is between a 1.7 and a 2.3 for Q1 adjusted EBITDA loss. With 11.3 million of cash exiting the quarter, I do see that EBITDA approaching zero this year, especially into Q4. We're well capitalized to continue on our path. We also, at the same time, are continuing to invest in our growth. So, we're fairly disciplined, but we are making sure that our operating expenses are as highly focused on revenue generating activities as they possibly can be. And with that said, in Q1, we did shift more of our operating expenses towards direct sales, built off the early success of the direct sales team that we established. We have invested in data, and we have invested in ad tech. So we're totally well funded to operate and to execute on our immediate goal. And I think that those results will be strong as this year continues. And that's it.
Adrian, your thoughts on, I mean, this has truly just turned into being an amazing company that is prying on the fact that a third of the world is consuming data differently, and you guys seem to be on the forefront of where things are going in the world, which makes me excited to be a shareholder and to speak with you guys as often as I do. Can you maybe comment on what some of the other opportunities you see out there, runway for the company, whether or not you guys are looking at any M&A transactions? And there has been some talk and chatter about a listing in the US. Maybe you could comment on that as well.
Sure. So I'll answer the last part first. Yeah, we believe that the business and the share price will benefit from a US listing. We've done most of the heavy lifting to get us to a place where we can file and apply, and we're about to do that. So again, the timing on that, we'll have more to say as we move through the process, but That's very important to us as a near-term goal. Look, we are a focused management team, and we have really 5 areas of focus. We want to own more eyeballs, and we have a unique ability from an M&A perspective to own more eyeballs and to roll up more sites in a non-competitive environment. We want to own more eyeballs. We want to sell more ads and subscriptions. We want to create more content, develop new revenue streams like content licensing and e-commerce, and we want to mine more data. And we're going to continue to relentlessly execute against those 5 priorities. Some are organic, some are M&A. But again, what we have is truly unique. Its value is only increasing. Again, I'm in my 40s. I don't necessarily relate to it as well as perhaps Alex and Julia and other folks that work with me do. But look, kids and young people do not consume content the same way that people like me did. No one's tuning in 30 million strong to a Seinfeld episode. They're participants in content creation, user-generated content, over-the-top consumption. People are migrating to online communities. And the other thing people really need to remember about video games, look, when I played video games, it was the most antisocial exercise. Locked in my room or at a 7-Eleven and trying to beat a machine, right? That's not what video games is anymore. It is the social network of the present and future. This is where people interact, make friends, develop relationships. That's why they look forward to it every day. So again, and then you've got the privacy revolution on top of it. All of this and again, the privacy revolution may not even be selflessly motivated. There's a reason why Apple wants to see a way to see phone ID registration done with. There's a reason why Google wants to eliminate third-party cookies. Of course, they stand to benefit under the guise of privacy. But all of these trends, Erik, lead to the fact that online communities, you saw it with Barstool, you've seen it with Roblox, they're going to be more and more scarce and more valuable. And we own the most in the world of gaming. And so at the end of the day, however we got here, that's a fact. And we're going to continue to execute on our 5 priorities. And it's why our mission statement, as hokey as it may sound, to build the world's largest community, platform of communities for gamers and esports fans, is a very, very solid strategy. And we're going to continue to execute.
That's great, Adrian. I think we're right around, actually through 30 minutes that you promised you'd give me. I appreciate your time today, Alex, Julia, and Adrian, for being on the call today. Future looks bright for Enthusiast, and I'm super excited to be a shareholder and glad that that you guys have executed the way you did. It's commendable. I thank you. I thank you for your time on the call today, and looking forward to the next chapter for EGLX. And I really don't have much. You've answered everything that I thought that I would need to ask you, Adrian and Alex. Thank you. Thanks for being on the call today. Appreciate your time.
Thank you, and as always, thanks for being a believer. We appreciate it.